What is up, everybody? Logan here again with another video coming right at you. Today I'm joined with Vance again from the Discord. He's a very, very helpful member and great trading mentor and help along the way with everything when it comes from data to actually taking trades. And we're restarting, if you guys remember the 3K to 10K challenge, we got that up to 5K. You know, we got a little slower start last year, and then we kind of put this to the side once January happened and the market was very volatile. So we missed our goal last year on getting it up to 10K. Then we took a bunch of time off with the volatility and have just been trading zero DTEs, which I've been on a really nice hot streak with. But the thing with the zero DTEs is if you have a small account and you're trading SPX, you have to be very diligent, very hands-on and watching it, right? So what we're going to do here is restart the challenge, and we're going to restart it from 5K. Our goal is by Christmas to get it up to 10K, as the market is still very volatile. But by doing new strategies, not using SPX for specific strategies because we're starting with 5K again. So this is kind of what we're thinking about with this one, and we really appreciate you guys watching another video. Make sure you leave a like, comment, and subscribe, but I really appreciate you coming back on, Vance.
Hey, not a problem, sir. So yeah, the basic setup is what we're looking to do is try to basically double account through the end of the year. And the reality of it is the way the math works out is it's around a 4% gain every week through the end of the year. Some weeks are a little bit less, some weeks are just a tiny fraction more. But for the most part, it's a very doable notation to make. So what we plan on doing is not being too super aggressive. We probably, like Logan mentioned, we probably won't touch SPX until we're probably close to the $7,500 level. But we're just going to look for some pretty solid underlyings, some zero DTE, couple weekly swing trades, but the idea is that you can put on some solid trades, get some decent returns without risking the entirety of the account, which is really what we're looking for. Mm-hmm. So if we can hit our weekly target goals, which again is about 4% a week, give or take, we'll easily make it to 10K. And then, without going too much into the weeds, the stretch goal then for 2023 will be to take that 10K account to 25K plus, because that gets people out of the zero DTE, the PDT error problems that they have to deal with. You have to deal with hacking out of accounts or anything like that. And I'm pretty much of the mindset that if you've got a $25,000 account, and you make some conservative smart trades, like you don't need to work. Like that's your job. Because with zero DT the way it is right now, you can pull home $300-400 a day pretty conservatively. Mm-hmm. And $400 a day, figure you win 200 times a year, that's 80K. It's a nice paycheck for most people.
That's huge. Yeah, and I think the really cool thing about this too is just taking a new approach where, not risking very much of the account at a time and just being smart, taking the small wins every week, that 4%, because the market's been extremely volatile. And a day like Friday, right? If you put a swing trade on, and for anybody who watches this video maybe further down the road, Friday we dropped about 3.3% on the day. Yep. The SPX fell from about 4,200 previous day close all the way down to 40.58. I think we closed at. So yep. That's a pretty big intraday move then very next day. So just to avoid, if you were in with the whole 5K to make 4% that day, right? You're like, oh, I just want my $200, and then you get completely destroyed, right? So I think that'll help, as I think like we're still in this kind of 2008 2.0 time where this market could get nasty through September, right? September's historically red. And yep. Ending August on a bad note, down 5% on the week, you don't want to have a lot of your money at risk in these markets. And, it's a fun like little bear market challenge. Just see if we can find value throughout the volatility, and it's just about positioning ourselves at the right place at the right time. And a lot of the trades, they'll be very similar to what we used to do, credit spreads on, Microsoft, and a lot of other similar trades to what we had done in the past, just less risky as far as like how much capital we're putting at risk into a trade, and there was a time when we had the 3K, to 10K challenge, and right when we slapped a trade on, we were risking 1,000 to make, 150. And it's like, that's a pretty hefty amount, right? Because it's a small account. So I'm just really excited to see what kind of, strategies we can come up with through the volatility, and as we kind of traverse this potential next leg down of the bear market before we start to bottom out.
Yeah. Yeah. I foresee, with a small account challenge, sometimes the non-theta type plays are actually really solid, well placed long butterflies or long iron condors, or a well thought out debit spread, that you can enter into for a relatively cheap value that can pay off if the trade moves in your direction. When you can put on a trade and you can risk $40 or $50, and that's your max loss, right? But you could potentially turn that into $200, $300, $400. Like that's a solid trade. And I know that historically, especially right now, everybody likes to talk about theta decay, and theta decay and credit spreads are great, but the downside to those types of trades are, because you have to put up a collateral, right? You're putting up a large chunk of your account to make a relatively small amount.
Mm-hmm.
Yeah, technically, in some cases, the odds are in your favor, right? But if you are pretty confident, right? If you're doing some technical analysis and we're looking at something and we're confident that a certain move is going to happen, right? Sometimes it's just better to be on the opposite side of that trade,
Yep.
right? Because you can enter into it for pennies and get a much larger gain than the other side.
Absolutely. Yeah, and that's, one thing, breaking this down is just being more long-term with it. It's just, okay, let's start with a bigger sum than the 3K, because we had initially built that 3K to 5 before we stopped the challenge. And that was mainly just due to the volatility at the time and looking at the risk and, a lot of the main news events at the time that were going on. And I think as, you get more experienced working with bear markets, because it's super rare for us to see them anyway, that we're just with the amount of knowledge that we've gotten off just the expected move math we've been running and all the data we've been pulling, it's just really nice to see more opportunity available. A lot of the things we've been running and testing have been working really well lately. Like my 0DTs are 42 for my last 43, which is just insane, through this volatility. And I sat out Friday for a reason, right? Like you wake up, you look at everything, you look at how well you did your week, you hit your goal. What's the point of putting more risk on after you hit the goal? And that's what we're doing here, is just slowly stacking the account over and over and over, so that, yeah, at the end of the year, you have $10,000 to work with in that specific account. And, that's one thing that I'm looking forward to do as well, continue to grow and just see these strategies, because you could also run these at scale, right? You could do the 50K to 100K challenge and just run
absolutely
at scale. So you could shoot for that 4% on your account from the beginning of September to end of December. So I don't know, I'm just really excited about this one, and even more optimistic than before, just with how much we've learned, as well as running the strategies that we've ran throughout this trading period that's been pretty difficult for most people. And even if it's just your long-term portfolio getting absolutely obliterated with all the pullbacks, and when SPY got down to 365, you're just sitting there like, how does this even happen, right? Like, it just feels cool. So I'm excited, the short-term swing trades, and maybe looking at your weekly trade that you put on to put some of that in as well. So I'm really excited for this one.
Absolutely. No, I think it's it's a good time. And the thing about a bear market that I think a lot of people don't realize, right, is a bear market, it's very healthy, right? We need them, but B, like they are, in my opinion, the absolute best time to learn to trade. And the reason I say that, and not to go too deep into it, but I learned to trade coming into the dot-com crash, right? And one of the things I learned early on because of that was that you have to be careful with your trades. When you're trading in a bull market, a strong bull market, which we just came out of probably the strongest bull market ever, right? It's really hard to lose when every day, for the most part, is an escalator up, right? And you get very complacent with the fact that, oh, I can just put on a put credit spread in the morning and I have walking into the day like an 85% chance of winning, right? That doesn't help teach you good trading habits. If anything, right, it actually stymies your growth as a trader because you reach a point where when that ceases to work, like you're like locked up. You're like, oh, I don't know what to do, right? So the bear market is great because it really teaches you how to be nimble, how to think on your feet, how to look at things from a different perspective than maybe what you're used to. And again, a lot of the reasons why I think the market has been in love with the credit spread idea, right, is because if you put on put credit spreads like every day, right, you won so much so frequently that it was literally the go-to strategy, right? You could put out a 14-day, a 21-day, a 30-day, or 0 DT, it didn't matter, right? The market was just going up. Long term, you didn't need to fret that, oh, this 30-day credit spread I put on Apple, man, that might come back to bite me in the butt. It very rarely did, right? But now it might, right? And you have to think, you have to do a little bit more analysis. So I think this market's really good for teaching people because let's be blunt, right? Let's call it as it is. There's a lot of people who started trading, right, because of the coronavirus and this and working from home and this is what they got into. And the only market they know is that's it. They just know this escalator to the sky, and this is a different market for them.
Absolutely. That is, and that's the other thing too, is breaking out of that mindset, right? Of like every trade needs to be this specific strategy because the market conditions have completely changed.
Yep.
And I know a lot of people that haven't even traded all year because they don't know what to do.
Yeah.
It's on them, right? Like that's just something, if it's not in your wheelhouse and you have other focuses in life, like go for it, right? But if you're still trying to crush the market, you have to adapt. So
Yep.
that's what I'm most excited for, and just shooting for more of the long term. And I think that's what's really helped me this year was just, it's given me an even more long-term focus when it comes
Absolutely.
to markets, because of when you see this volatility, there's days like yesterday, like Friday, where you're like, gosh, I'm so glad I didn't put a big trade on because, if I was on the wrong side of it, that volatility, I would have just gotten crushed. So
yeah, for sure. I was lucky because I had put credit spreads on, and then on one of the run-ups, I closed them for a 35 debit, and I made about $40 or $50 per contract. And had I not done that, I would have suffered max loss because they would have ended up about 35 points in the money.
Yeah.
So, but that's just for those who have never heard me talk about taking profits, like I am a huge advocate of locking in wins. When you hit a 10 debit, like if you've received more than like 15 credit, like you gotta punch that ticket and take that money and go home and let someone else play with the ball because these things happen. They're rare, right? They're rare. Let's be honest. But I've seen too many in just the past 2 years. I've seen probably 5 or 6 days where a spread that I had was a 5 or 10 debit, and it came back and closed in the money.
Yep. Oh yeah, I've had that too. And that's one thing we were talking about with this challenge too, is just we're going to keep you guys updated every single week on how it goes. If you guys want to trade with us specifically, come join the Discord. We'll be calling them out. And just to, keep everybody head on their shoulders during this time of volatility, because I actually know more people that are trading larger than they typically ever do because the volatility is so high, which sounds kind of crazy. Like you'd be like, how does that make sense? But it's like when you read the articles, it's like, or this year people are spending more money because money's stressing them out, and like that's how they cope with it. And you're like, how does that make any sense?
Right.
And it's this, but that's what's, you see that like people are taking larger shots because the volatility's up. And typically it used to be the other way around, right? When we were in that bull market. So there's a lot of emotional decision making going on. So I think just holding on and looking towards the long term during this time, I'm still very, very excited for the challenge and seeing what we can do with this and keeping everybody updated every week on our success with it. And then, we might have a drawdown week and we might have weeks that we exceed the P&L, but we're going to do our best to stick as close to, that specific graph as possible.
Yep. And we'll have some colorful graphs. There's really no data to show, so I've got some example information, but we will have some colorful graphs and trades to show. Again, I threw some filler information in here so it wouldn't just be a bunch of blank screens, but we will have some information for everybody to look at. For those that are members in the Discord, there will be a live, the dashboard will have a live link for everybody to look at and see where we're at for those that are following. So
I'm excited. Well, I appreciate you coming on for another video. Is there anything else you want to touch on in this one?
I think we're good to go, sir.
Cool. Well, I'm excited, and I appreciate you guys for being, open to another challenge that we're running. And like I said, the last one we did well. It's just we didn't continue with it, but we still, 3K to 5K in the few months that we were trading through as well. Pretty solid return there. So hopefully we can continue to scale this up pretty well, but I look forward to the challenge, and we will see you guys in the next video.